Hello, today I'm going to be taking you through a trade that I took on GBPUSD that managed to make me $6,000 in profit and 5.3 R. So let's dive right into the video. So as you see here, we start with the top-down analysis. As you can see here, the market is in a downward trend, as you can see, continuously breaking structure to the lower side, breaking structure, breaking structure, breaking structure. So in this recent lag of price action, as you can see, this recent lag, this very one you can watch, this is it's still a bearish move. So this was a push that caused a break of structure, as you can see here, but the market has pulled back to a zone on the 4-hour time frame. On our 4-hour time frame, we have a 4 minutes, a 4-hour supply zone, as you see here. The market is pulling back to a zone. So such zones always have much selling pressure and higher power to drive the market back down. So that was the basis of the trade. This was 8th. My trade was taken on 9th of July. So as you see, on 8th, the market came trying to approach the zone. So we can go to the 1 minute to the 1 hour time frame and see. As you can see, on 8th the market closed before reaching the zone, and on 9th it was likely approaching. So our thesis here was that if the market approaches this zone, we shall look for sales on GBPUSD, which was our trade. So let's first decrease here the speed. So as you can see, I shouldn't decrease too much. As I'm a day trader, I always want to trade on the lower time frame, so I'm gonna go down to the lower time frame. Sorry for that. Okay, this is it. So as you see, the market, remember, okay, my trading strategy is SMC, system is SMC, the strategy is SMC, but my system says we always have liquidity above and below the Asian session. So as you can see here, this is our Asian session beginning at 3 in the night, 3 a.m. East African time. So it's around 1 a.m. British Standard Time. But anyways, let's continue with this. This is 3 a.m. Let's wait for the Asian session to close. As you can see here, the Asian session gives us the Asian session range, which can provide us basis on what to trade. So as you see, the market closed the Asian session with this, and the Asian session was this range. So the market closed off the session with that, forming that range, and according to my system says if the market sweeps either the Asian high or the Asian low and then confirms back into the zone, we can take it to the other side of the Asian session. So as you see here, if it could give us a sweep, the trade idea was that if the market breaks and gives us a push into this zone, it will have swept liquidity. Of first of all this high, Asian session high, then into this zone. So if it gives us a confirmation after tapping into this 4-hour zone, remember this zone caused a significant push down to the downward side. So there is liquidity sitting on this swing high and also above the Asian session. This is something like a confluence. So if the market sweeps and taps this zone, confirms down, we could go in for sales. So let's play out the market. As you see, the market has swept the liquidity above here, then tapped into our zone. So now we were waiting for this any confirmation downside, breaking structure, continuous breaking structure downside, so that could give us a trade plan to go down, to go lower with the market. So that was our trade idea. So our trade idea was essentially breaking structure, continuous breaking structure to the downward side. Yeah, and that was the trade idea. So After tapping the zone, you can see the market started providing some reactions, as you can see. Now I went back. What I did is that I went to the lower time frame, which was the 1 minute time frame. I watched the market. The market caused the first break of structure here, as you can see. The market caused our first break of structure here, as you can see here. Our first break of structure was this one. The second one was this one. So the market was providing essentially what we needed and what we needed to see. So those are the break of structures showing a shift in order flow. So we could wait for essentially another shift in order flow to confirm. So there is another one also. What I did is I waited for another order flow to confirm. So after this, I saw there was liquidity here, relatively equal highs. There was also trend liquidity, trend line liquidity, as you can see here. Essentially here, that was the liquidity above here. So that was the trade idea. So my execution was to be at this zone, this supply zone, 1 minute supply zone, and my trade tool, my trade limits that I executed limits on was here, with my stop loss just above the high, exactly above the high, and my take profit to the Asian session low. That was my take profit, exactly at the Asian session low, sweeping the liquidity below the Asian session low. So that was my trade idea. That was the overall trade idea. A shift in order flow, as you can see, it's becoming bearish. After this was a higher high, higher low, higher high, lower low, lower high, lower low, lower high, lower low. Liquidity left here, liquidity. So I was essentially waiting for liquidity to be swept here, fill into the order, then the market should rally. That was the trade idea in the start, in the beginning. So essentially, let's play the market forward and see what happened. Now, as you see, the market did as I expected. Remember, trading is a game of probabilities, so this provided me a higher probability trade to enter. So the market came, swept liquidity, but didn't feel the imbalance totally, didn't tap into my entry, into my prime entry. But then the market, stupid, sorry for that. Then the market started selling off, as you can see here. Then the market started selling off, as you can see here. Started selling off. Now, after the market started selling off, remember the market was feeling most of my confluences, and I said this is where I essentially opened my position from. I essentially opened my position at this very zone, with my stop loss just above the high and my take profit lower. I take profit at the exact same place as the first one was, as you can see here. It might take profit at the exact same place as here. Yeah, hope you can see here. This was essentially my trade. So as I'm on a backtesting software, I think I should execute on this very one. Let me try to execute. So I'll execute and risk. Never risk more than 1%. So, but as it's backtesting and I know the outcome, so I'm just risking that on this trade, just 10%. So I essentially opened from there. That was my stop loss. essentially giving me a 5.3 R, though this one is just something like 5.8 R, but the overall was 5.3 R. Overall trade, those are just because of spreads, but my overall profit was 5.3 R. So we can essentially play the market and see what next. So as you can see here, the trade started. So this is essentially how it went on. Let's run it from the 5-minute, because I watched it and managed it at a 5-minute time frame. So this was it essentially. So the trade, as you can see, within no time the market started reacting as expected. So that was it for the day. I was done for the day, just right there. So that was it. That was a good trade. It was a 5.3 hour trade. Okay, I think my stop loss was a bit more conservative than this one. 5.3 hour trade, a bit like here, yeah, a bit here, yeah. So essentially that was the trade. It was held from 10 to 14. So those were essentially 4 hours. So yeah, that's the good thing about this strategy. As it was anticipated here, it did off as anticipated. So that was the trade for that day. And guys, you can join my Telegram channel. The link is in the comment section. It's gonna be in the comment section, the first pinned message in the comment section. And